So today was the first of what I hope it is many coffee to closings. I'd like to start doing this maybe at least once a month. And, anybody is welcome to attend. It's not always going to be about down payment assistance loans. I've had a lot of people ask about self-employed buyers. I've had a lot of questions about VA loans, all types of things. And, it's not just for home buyers either. It could be people who are maybe looking to, get into real estate, or maybe people who are already, actively working in real estate or in lending, who just want to learn more about a specific thing, or, come meet me and bounce ideas off each other. So, today we had just as many realtors in attendance as we did buyers. So that was really cool. I think that there's something in it for everybody. So again, I appreciate your guys' patience as I kind of figure out how to do this. And hopefully the next one will go much smoother. I'll probably have to do it where we do Zoom one day, and here, as you can see, I'm in my cave at home, where the worst background noise is probably going to be like a dog barking or one of my kids, So that would probably be better to do one in Zoom and then meet up in person, because I really do like getting face to face with people. We weren't able to do that for a very long time. So I think a lot of us have got used to using Zoom, and that's cool too. I love that we're able to connect, because I am licensed in multiple states, so I can reach people, near and far by doing it online. But, there's just something about getting together over coffee and actually talking face to face. I feel like you think of more questions when you're sitting in front of somebody versus when you're just typing it into a chat box. Because when I was trying to present earlier online and I asked, does anybody have any questions? It's just crickets. But then as soon as I turned off the recording, I wish I would have left the recording rolling, because that's when all the juicy stuff started to come out and we really got, to dig into this. So anyways, without further ado, let's just hop in. Let's kind of go through these slides. I'm going to try not to just sit here and read them to you verbatim. If anybody would like a copy of this, just email to them as a PDF, or, feel free to take screenshots if you want to. Let me know if there's any materials I can give you. I have some flyers, stuff like that. So, but I just wanted to kind of go through some of the highlights. So this is about Cardinal. I've worked at Cardinal for a long time, almost 5 years. So almost all of my career that I've been a loan officer has been right here at Cardinal. And that's for good reason. I think that, we are a great company. I truly love working for Cardinal. I drank the Kool-Aid, as they say. I am not one of those people who is, the grass is greener somewhere else, because I've seen the grass. I've seen kind of what some of my colleagues have gone through, or, I've kept in touch with other, coworkers who have moved on to other companies, and we talk. I mean, you think we don't talk? We do. And is Cardinal going to be the lowest or whatever every time? Not always, although we are very well priced compared to our competitors. But nobody is always going to be, number one all the time. But I think that our reputation and our prices and our products, our interest rates are all very good. And I like working here. I'm happy with it for sure. There's almost no buyer or scenario that I can't help with. And I love that. So we are a direct lender. Most of the loans that I do are going to be processed and underwritten right here at Cardinal. We even retain our loans after closing. So what that means for people that are familiar is, after your mortgage is finished, your loan is finished, usually what can happen is it can get sold for servicing. And that's not always a bad thing, but if you've ever had a bad experience with your loan being sold or transferred, you know why it's beneficial when it stays with your original lender. So I like that. And our CEO lives here in Arizona. See him quite a bit. It's kind of cool, to get to see him in person. That way we, I feel like we get the inside scoop here at our office. We'll know about new things that are that are coming out soon. We kind of have like a one up. It's a little bit of an advantage having the CEO here local, even though our headquarters is on the East Coast. So anyways, I could go on and on about Cardinal, this and that, but that's just a little bit about our company. And then a little bit about me. So I kind of already mentioned, I'm here in Maricopa, and I actually, I'm licensed in 7 states. Actually, this is incorrect. I'm licensed in 7 states, but I have made it my goal to really just kind of focus in on helping my community. And I've been here since 2009. I've seen how much the city has grown around me, and I want to be part of that in a positive way. I want to, I don't want to see people get left behind or priced out or have to go move or, like I want to help educate people about how to buy a house, how to even get started with buying a house. That way, if they love Maricopa as much as I do, they can be part of that growth and, get themselves a home of their own as the city continues to grow. So if you want to know more about me, there's a little bit in there. So how can I help you, basically? So like I mentioned, I can help everybody who is either maybe you're selling and you're buying a new house, or you're moving from out of state, or you're a first-time buyer, or you want to get an investment property. Whatever your unique situation is, I want to hear about it. I don't think that there are any 2 loans that are exactly the same, just like there's no 2 buyers that are exactly the same. So I love working with veterans. My dad is a veteran, my grandpa. So that's very near and dear to my heart, is helping our vets. They're some of the best people to work with. Honestly, that's something that I really enjoy doing. Very knowledgeable about VA loans, so I can help with that. I also seem to have found a niche with business owners, self-employed buyers. I know that can be pretty overwhelming. I've even heard some loan officers say, kind of stay away from doing, either bank statement loans or, people that don't have, straightforward income. There's even like some loan officers that don't really want to get into that territory, where I love it. I love helping, figure out how we're going to get business owners, how we're going to make business owners become homeowners. So that's something that I like to do as well. And communication, support, knowledge, these are all things that I feel like I can offer. So now into kind of our topic of the day, which is down payment assistance. So in here, and I probably am going to read most of this verbatim because it's pretty shocking. About 64% of Americans are living paycheck to paycheck. That actually, that sounds right. I might even think that it was higher than that, honestly. It makes it very difficult for people to be able to save up for a home, because a lot of the times, even at the bare minimum, you need to put 3% or 3.5% down, which, if you're talking a $200,000 house, that's $7,000. If you're talking, a $300,000 house, that's $10,500. Yes, $10,500 for 3.5% down. That's a lot of money. Unless you win a scratcher ticket or something, like it's really difficult for people they don't just happen across $10,000, $12,000, $15,000. It takes a lot of people years to save that. And look at that spread there between the average net worth of renters versus homeowners. So, the average net worth of a renter is about $6,300, while, homeowners, it's over $120,000. That's a huge, you're talking about building wealth, building, having stability, security, really having something of your own that you can grow, that is really a huge jump there between the average net worth between renters and homeowners, for sure. And then I thought it was interesting that the average age of a first-time buyer is 33 years old. That I would say that for sure concurs with most of my clients. if I had to average, is you're never too old. In fact, I feel like right now a lot of my clients who are buying are like in their 50s. So there's certainly nothing, wrong with that. So, but then also, I get phone calls from 22-year-olds and stuff like that. So yeah, 33 is an average age, definitely makes sense. And I think that these down payment assistance loans are a great way to help people, bridge that gap between renting, owning, and kind of give you that little added, not push, but like boost, so that you can really make it happen. So let's talk about how most renters become homeowners. So there's a chart here on your screen. The most common place where, by the way, this data was collected from me. So this would be like I went back through all of my closings from the past almost 5 or so years, and these are the most popular. So other lenders could be different. This is just from what I've noticed. So most people are pulling money from their 401k. That seems to be the most common place. And, it's a great option, I think, because if you're like me, or, like a lot of people, you probably have had a job most of your life or most of your adult life, and you just have money going into the 401k that you're not thinking about. It's taken out before you even see your paycheck. It's just automatically kind of being saved for you. And a lot of companies, in fact, I think all 401k companies will allow you to make a withdrawal for the purchase of a primary residence. I haven't come across one to date that didn't approve that for my clients. So if I have a client in front of me who's maybe, they are paycheck to paycheck, but I notice, hey, you've worked at Fry's, or you've worked, wherever for a long time. Do you happen to have a 401k? And they're like, actually, I do, and a lot of people don't know even how much they have in there. They don't look at it very often, which is kind of a good thing, and they might be surprised to find out that they have like 10, 15, 20,000 or more just in their 401k. So when you use that money to buy a home, it's almost, the way I describe it is, it's almost like taking it from one savings to another by, moving that money into the equity, into your first home. The next most common place would be from savings. So, just slowly, surely working your way up. And then gift funds comes in third place. So gift funds is money. So like a gift from parents or, brother, sister. The next would be a gift of equity. So that's a little different. That is where, like, let's say you've been renting a home for a while, and all of a sudden your landlord wants to sell. There may be, and they ask you if you want to buy it. There may be an opportunity there for them to gift you your 3% or 3.5%, however much, for your down payment out of the net proceeds of the sale itself. So those are really fun loans to do. I do a lot of those for a family too. So like, let's say your parent, grandparent, or whatever is going to be selling the home to you. That's a really good place to get that down payment. And then the next one, we have sale of assets. So this would be like, if you have a car that's paid off and you go sell it to get your down payment funds, or, people get very creative when it comes to this. I was talking earlier about a client of mine who, his daughter has like a YouTube channel, and she does like tarantulas and stuff. I don't know. Like, apparently she's got like a ton of followers on YouTube. She's like 8 years old, but her tarantulas had babies, and they sold these babies, and they made thousands of dollars for these tarantulas. I mean, that's kind of one of the more unique ones, but I mean, you name it. People sell, maybe weapons that they have, or knife collections, snake collections, baseball cards, whatever it is that you have of value. Just, if you're going to do that, make sure you've spoken with your lender first, because we do need to kind of source where the money came from. But that's pretty simple to do. But just, before you do anything, we should talk first. Definitely speak with the lender before you make any major financial changes. But yeah, that's definitely a creative place to find the down payment money. And then sadly, only about 2% of buyers are utilizing grants or government assistance. So that is something that is really opening up now. So I'm hoping that more people will know about them, will be able to use them to help themselves get into homes. I really think that a lot of it is just not really knowing what's available. So let's talk about the benefits. I mean, that's kind of obvious, right? Move into a home with minimal or even no out-of-pocket costs. Another benefit is they have very flexible credit requirements. There's no maximum income limits. That is actually pretty new. It used to be if you were either at or by a certain percentage of the area median income, you would not be eligible. But now there's no more income limits, which is great. And then another benefit, because these loans do have some higher rates, as we'll talk more about. But as long as you're making your mortgage payment on time, you should be eligible for in-house refinancing later when better interest rates are available. Now, somebody asked me during the meeting, it's not on here, but I just want to add, once you have made your 6th mortgage payment on time, that's the soonest that you could be eligible to refinance. So you don't have to wait like 1 year or 2 years or however many years. 6 on-time payments. And I'm not saying you're going to refinance after that, but that is when you are eligible, is after that 6th payment. So bottom line, guys, it's just to help people overcome the biggest hurdle that's stopping them from buying a house, which is the down payment. So how do they work? So the money, at least in Arizona, we have the Home Plus program, Pathway to Purchase program. Today, we're going to talk more about the Chenoa Fund. That's definitely the most popular option right now for several reasons that we'll get more into detail about. How much assistance can you get? So the grant is offered either as 3.5% or 5% of the sales price of the home. And there's no acquisition limit, meaning like the sales price of the home, there's no limit on how expensive of a home you can purchase. It goes up to the FHA loan limits per your county. So in Maricopa County, Pinal County, it's like $460,000 right now, $460,000 and change. So yeah, there's no restriction. It used to be capped at $300,000 was the limit, and nowadays it's kind of even difficult to find a house that's under that. So the fact that it's just opened up to the county limits is fantastic. Now, do I have to pay it back? So you have a choice, right? There are repayable versions and there are forgivable. So that is something that I wish I had like just a clear answer, but it's not a one size fits all. We would have to sit down and look at the options kind of side by side and figure out if you're going to do a repayable or a forgivable, so, like I sound like a broken record here, but everybody's unique. So, but yeah, you don't have to pay it back if you do the forgivable option, I guess is the easiest way to answer that. Now, how do you know if you qualify? So the minimum credit score required is 600, which is great. A lot of down payment assistance programs were, if you didn't have a 660, that was it, So 600, that is great. That is actually only 20 points higher than a non-down payment assistance program. So just let's say a regular FHA loan, for example, you have to have a 580. And these are FHA loans as well, but these are with down payment assistance, and you only have to be at 600. So that is something that I could definitely help you with as well, because I know, for some people getting a 600 credit score may be a challenge, But with my help, I've been doing this for a while, guys. I can go through a credit report with you for free, by the way. My services are free, if I didn't mention that. I'll be with you every step of the way, start to finish. So if we need to spend a little bit of time really, digging into your credit and seeing what's going on, I can tell you kind of maybe a few pointers, things you can do that cost you nothing, that maybe will help improve your credit. Getting to 600 for most of the people I talk to, we're able to get them to 600 pretty quickly. Even people that never thought, they've never had a credit score over 600, usually with my recommendations, we can get there pretty quickly. Also, there's no income limits. I can't remember if I mentioned that on a previous slide. So yeah, that's definitely something that people want to know right off the bat is, what credit score do I have to have? Is there a cap on income? And the answer is 600 credit score, no income limits. What's the process like? So this is a super simplified breakdown of the home buying process. I actually have a whole different presentation that breaks down every little tiny step from start to finish. But just to summarize, because I know this is, we're talking about a lot of first-time buyers here, so I don't want to overcomplicate it and give you too much at once, which I tend to do anyway. But the process basically starts with me. We'll get together, talk about your credit, talk about your goals, look at your income. We call that being pre-qualified. So pre-qualified, it can be a 10, 15-minute phone call, just, while we look at credit and talk about kind of the game plan, getting the structure of everything kind of put together. And at that stage in the game, it's just, it's all verbal. You're just telling me about your situation. You're just telling me about your assets, your income. And then based off of that and looking at your credit scores, I should be able to kind of narrow down at least a loan product or two, maybe more, but, we'll have at least an idea of which direction we're going to want to go with the loan at that point. The next step, based off of that conversation, I'll let you know which documents I need you to get together. I call it a to-do list. So I'll give you a to-do list. It's gonna depend on the type of employment that you have. If there's any, additional documents for the type of income that you're receiving or whatever have you. But usually, it's like 4 or 5 things that I need you to get for me so that we can then take you from just being verbally pre-qualified to being fully pre-approved. Pre-approved, the difference there is that now you've provided documentation to support what we had talked about. And it's, excuse me, and it's not only been reviewed by myself, but I've then also had it reviewed by our underwriting department. And I know when a lot of people hear the word underwriting, it's a little intimidating. I promise you, it's not just some, mean old crusty guy with a big, denied stamp who's waiting to, it's not at all how it is. In fact, a lot of the underwriting is automated and it does not take very long to get a decision. Usually from the time, let's say you're ready to go, you want to start looking for a house, you get me all of your documents right when I ask for them. We can have an underwriting decision within about 2 hours, 2 business hours. So yeah, it's a pretty painless process. I'll be there to help you. And then after all that boring stuff is out of the way, the next part begins, which is shopping for your house. So I will kind of pass the torch over to your realtor. And if you don't have a realtor, just let me know and I'll recommend a great one for you. I'll give your realtor a copy of your pre-approval so they know what your budget is. And then that's the fun part, getting in the car, going out and looking at homes. Your realtor will negotiate for you. And by the way, the realtor services are also free of charge to you as the buyer. And we work together, the realtor and I, me on the lending side and them, I refer to it as they're my boots on the ground, taking me out, and really fighting to help you get, a good deal on a home that you love. And then finally, once you do find your house and your offer is accepted, we move into the closing. That step alone, that there's a lot that goes into that, but just to keep it nice and simple, basically there's about a 30 to 45 days. For down payment assistance, it's a little longer. It's maybe closer to that 40 to 45 days. Not always, but especially since you're already pre-approved before you're shopping. But yeah, I usually, like to tell people 30 to 45 days just to be on the safe side for basically all of the background work to get done, the appraisal, like I said, there's a lot that goes into that. But with me by your side and your realtor by your side, it should be a pretty simple, straightforward, and hopefully exciting process. So let's talk more about different home buying options, not just down payment assistance. I want to take a step away from that for just a second and compare it to other options. So the first one would be if you're an eligible veteran, you could do a VA loan. I told you, I love doing VA loans. They are truly 100% financed loan. So basically loan to value is 100%. That means if the purchase price is $350,000, we are lending you all $350,000. So there's no down payment for a veteran. The interest rates are also pretty good for VA loans. And best part, in my opinion, is that there's no PMI, which is mortgage insurance, not to be confused with homeowners insurance. Mortgage insurance is a premium that you have to pay monthly when you put anything less than 20% down on a house. So if you have less than 20% equity, you'll carry PMI. Just to really simplify what PMI is, we could go into detail about that, but just to kind of keep it simple. So on VA loans, there's no PMI required. And so obviously, if you are a veteran, thank you for your service. Let's do a VA loan. Another option is a 3% down conventional loan for first-time buyer. That's why up here where it says 97% financed or 97% loan to value, because you're putting 3% down. We are lending you the other 97. This is a good option for people who have good credit scores and maybe just not a ton of funds to put down, but they have maybe like a 720 or higher credit score. I would probably be more inclined to recommend a conventional loan for that person. So with your down payment, closing costs, your cash to close, you'd be looking at about $18,880 when I ran these numbers. The monthly payment is slightly higher than the VA loan because you will have PMI. With FHA, FHA is very flexible. I do a lot of FHA loans for first-time buyers. Sometimes people refer to FHA as a first-time buyer program. That's not quite accurate because you don't technically have to be a first-time buyer to get an FHA loan. But I get why they have that reputation because that's definitely probably the most common type of loan for the first-time buyer. So it requires 3.5% down. So just slightly more than conventional. Now, as I'm sure you noticed here, the interest rate on FHA is pretty sweet. Like VA loans, these are backed by the government. The interest rates are a little bit more enticing than a conventional product. And as you see here, when I ran these numbers, the cash to close was pretty similar to the conventional. However, the monthly payment is higher because the PMI difference, the PMI is higher. I know. That's why it's so important to talk with the lender first and kind of know your options because, less money down doesn't always mean, less cash to close, if that makes sense. So the last two options, these are FHA loans as well. However, this includes down payment assistance. And you're probably wondering, 101.5%, that sounds crazy. The reason that it's 101.5% is because 96.5% is the first mortgage. And then you're getting a down payment assistance of 5%. So you only need 3.5% of that to cover your down payment. That little extra 1.5% could be applied toward your closing costs. So on the forgivable option, the interest rate is slightly higher because it's forgiven after I believe it's 2 years. There's no payment, but if you don't sell the house or refinance, it disappears. I may need to come back to that. It might be 5 years, actually. If somebody knows, feel free to call me out on it. But to be honest with you, I don't do a ton of the forgivable options, and you'll understand why here in just a second. So I want to say it's 2 years, but anyways, if you do not sell the house or refinance it for X amount of time, it simply goes away. So you never have to pay it back. Now, you will end up bringing a little bit more money to closing on that one, about $6,400, but the monthly payment is a little bit lower than the repayable option. So repayable option is kind of set up similar. So again, you're getting a 5% down payment assistance. You're required to put 3.5% down on the purchase. So you'll have that remaining 1.5% to help cover some of your closing costs. Interest rate is a little bit lower, and you're making a monthly payment on that 5%. So whereas on the forgivable one, it's just a silent mortgage. On this version, you will have a payment. It'll be all roped together in one bill, so you won't get billed separately for it, but it will be part of your monthly mortgage. And that's included in the payment there that you see, the $28.97. And it actually, because you are getting that grant in this scenario, when I did these numbers, it actually had it working out where you were getting $129 back at closing. And that's actually very possible. So if there is a little bit of excess, you can use that excess to buy down your interest rates. You can use it to prepay your homeowners association fee. So you can actually use that grant, not just for closing costs, but also to, if there's anything extra, you can use it for other things as well. So here is another chart. These options are just the comparing down payment assistance side by side. And I actually made this a few days ago. The rates are slightly better now than they were when I did this, which is always good, right? So forgivable 3.5 versus repayable 3.5, you'll start to notice a pattern here. If it's a forgivable loan, or I'm sorry, a forgivable down payment assistance, your cash to close is going to be a little higher. If you're making a payment, if it's a repayable grant, your cash to close is going to be lower, but your payment, of course, is going to be a little higher. So that's why it's, again, I can't stress, how important it is that we get together, and we don't have to put all of the details, perfectly in place, the first time that we talk. We can always come back and check options and kind of fine tune it. But it's just really important to know what your plan is, kind of, which direction you're going to be going, what your budget is. And, that way, once you do find the perfect house that you're ready to make an offer on, I can run, and this happens all the time, actually, almost not every time, but a lot of times before one of my clients even puts in an offer on a home, we'll do some quick numbers. We'll do some quick comparisons, and I'll be like, okay, here's this one, this one, this one. And they'll be like, okay, that sounds good. Just because I think it helps people feel more confident, when they can kind of have those ideas ahead of time of what their payment's going to be, what their down payment's going to look like, cash to close, if anything. So that's definitely something that I really encourage you to do, whether you're buying now or you're not buying till next year or whatever the case may be. Just think about if you're renting right now and the reason that you're not buying a house is because you haven't had a chance to save up the money. Consider doing one of these loans. Just consider it. And I understand how those payments can be shocking. The interest rates can be pretty overwhelming. Trust me, I get it. I was here when the interest rates were 2.5%, but I was also here when they were in fact, my first year in the mortgage industry, the interest rates were about 6%. And that was not with down payment assistance. That's just what the rates were. So, interest rates will come and go. They will fluctuate. If what they're saying is correct, that we are heading toward a recession, then you can almost guarantee that, during recessions, the first thing that they do is lower the interest rate. So, and I'm not saying to bank on that. I would never, ever tell somebody to buy a house, with a payment that they're uncomfortable with, of course. But I'm just saying that is something to consider. If you're renting right now, your rent is $2,300, $2,500. Maybe you're renting for cheaper than what these payments are on your screen. Just consider what you're going to do a year from now if your rent goes up again. So that's just something to keep in mind. Down payment assistance is not for everybody, of course. We do still have to go through all of the checks and balances. We definitely still have to check your credit. We still have to check your income. We still have to make sure that you can afford it. They're not, as, I guess, out there as some people think they are. Some people, think that down payment assistance is just a crazy concept. But actually, when it's done responsibly, this is huge for people. Like, they are game changers. And I do get those calls quite often of people who had done down payment assistance, like last year, the year before, and they're ready to refinance now and, get a lower payment. So just keep that, keep that in your mind, that if you find a house that is just, it's the one, you're happy with the sales price, your realtor has negotiated maybe, a good price for you, or maybe a little bit of a lender or seller concession is happening. Like, if you found a good deal and the only thing that's stopping you is the down payment money, keep it in mind, But anyways, I can never tell somebody when it's their time to buy a house. That is not my job. My job is just to educate, to be on your side. I will tell it to you straight. I will answer your questions, and I will be there for you from day one until the day you get your keys. So if you have any questions about this program specifically, or just questions about buying a house or refinancing a mortgage or anything like that, please reach out to me anytime. I am licensed in Arizona, California, Oregon, Washington, New Mexico, Texas, and Florida. So if you have any questions about about buying a home or refinancing one in any of those states, give me a holler. I apologize again about this morning. I know how crazy it was, or, trying to get the Zoom and people talking to me. So it's nice to just kind of do this with you here in my office, in my little bat cave. And hopefully we can start making this a regular thing. Let me know if there's any topics that you want more information about also, so I can start, putting together something for the next one. I am going to try to keep these videos brief. I apologize if this one ran long, but I appreciate you tuning in. Take care. Bye-bye now.